again for another episode, another installment. And today I am in Vancouver, British Columbia. I'm in BC. I'm making a road trip across Canada and stopping all along the way, and been trading all along the way on Interactive Brokers, and going against some of the principles that I teach on here, like risk management, diversification. Now, I didn't put everything in the stock market. You know, it's a portion of my net worth, but I shorted the Nasdaq. This January, I was long names like Intel, Meta. You know, I love tech, and I watched. You know, I bought Meta in on the lows in December, and I bought it at $90 a share, and I went, wow, $90 to $120. It rallied like 30%. I was like, okay, I'm taking profits, and I sold my tech holdings. And then I started looking at the writing on the wall, and I'm like, geez, inflation's a bit sticky, and what I'm seeing, things are not good. There are a lot of really bad things happening in the economy. Rates are going to be much higher for longer. The market started pricing in cuts by the summer. That was in January. And I thought, geez, I'm going to go all in on this Nasdaq short. And so I started shorting the Nasdaq, and I started shorting 1-to-1. And today I actually went 3-to-1 shorting into the bell. I was driving through the mountains, and I lost signal, and I had no signal while Jerome spoke. And I bought a bunch of puts, about like 30 grand in puts. And they were up 400% as he started speaking. Tried to sell them. I put the order in to sell them. Like, perfect. They went from like $1 to like $3. I'm like, perfect. This is good. Close my short out. Enjoy my vacation. I don't have to worry about it. I made some profit. And then I lost Wi-Fi for about an hour, 30 minutes to an hour. And I got back on, and I saw that it had gone from negative 0.8 to positive 0.75 or something, almost a full percentage on the day. That was a 2% reverse in the day. And I was short, I think it was 4-to-1. So I lost 8% of my portfolio today alone. On top of the last month, if you look at my portfolio, I've been short the Nasdaq while it rips. And the Nasdaq's up 12% this month. It's up 38% this year. It's up 46% from the fall of last year in the lows. So we're talking in a 5-month period of 40% index rip. Historically, that's happened only a couple of times ever. The CNN fear greed index right now is at 81, closing in on 82. So that, by the way, if you know how it works, 1 is like extremely bearish, people are fearful, and 99 to 100 is like maximum greed. We're currently in extreme greed. So the market sentiment is pure greed. Typically, like if you look at data, if you were to buy the dips or buy equities in times of fear, you do well. If you were to short equities in times of extreme greed, which we are in extreme greed right now, potentially goes higher. It's very hard to call a top, but there was a lot of downside possible here. We are not out of the way. There's a lot of pain to come, and the market is it feels a lot like the dot-com bubble. Now, in the dot-com bubble, bear market rallied like 60%. So could it rip 60% and then down 50%? It totally could. It's done that before. I've been holding this short, and it has been painful, guys. Like, I think for the last 30 days, I've lost every single day for the last 30 days except for one. 29 of 30 days have been down. And I'm talking down 30, 40, $50,000 every day after day. And I'm still holding because I don't want to capitulate. The minute that I give up on this short, I know that it's going to just crash, pull back 10, 20%. I can just feel it in my bones. There is a lot of negative stuff that came out today. The market is rallying, but Jerome came out and basically said that they're adjusting their end of the year target from a terminal rate of 5.1 to 5.6, meaning they want to hike 2 more times. It's not done. A pause doesn't mean it's done. And historically, when they pause too early, and core inflation, by the way, is still close to 5%. If you look at things like shelter, things like groceries, some of the things that you need to spend money on, they are the majority of your budget, because again, like food and shelter are like 2/3 of what people spend their money on. So like inflation really is like 20% over the last 2 years. And that's going to come to a head, right? Especially with interest rates being, near 7%. Things don't cash flow. Things don't make sense at 7, 8, 9, 10% mortgage rates for longer periods of time. So the longer this happens, the worse it's going to be for basically every sector. But for some reason, there's an AI bubble. And not for some reason, but there is an AI bubble. And where the top is, I don't know. But I'm going to share some lessons today, answer some questions you guys might have. But it's been a really shitty day for me. Mentally, I'm not in a good place today. If I had to share with you how I'm feeling, it's like 2 out of 10. I've lost, like I said, over $1 million just being short the market. If I had just instead longed the index, this 40% rip straight fucking up, for the last 3 months, the Nasdaq has pretty much just gone up every single day. We're talking like 11,000 Nasdaq to well over 15,000 price points. That's an insane amount of rip up. I think it was uncalled for. I think it was, you know, a little bit, at this point it's overbought. So it may have been oversold in the fall, but it's definitely overbought now. And the higher it goes, the more conviction I have in this short, but I'm ready to capitulate. It's just, I don't know how much longer I can hold this short for. There's a saying, someone just put it down there. I was just going to say that. There's a saying that the market can stay irrational longer than you can stay solvent. And it's testing me. You know, how long can I stay short the market? I will definitely not long. Don't take this as financial advice, but if I had any of the Nasdaq 100 stocks, I'm talking Meta, I'm talking, you know, Nvidia, especially Nvidia, you know, 200 plus price to earnings, 200 years of current earnings just to get your money back through profit. Like that's a joke. When I buy companies, look at 3 to 5 times multiple. Maximum in real estate, you'll go 10 times, right? Like if you can't get your money back in 10 years of holding that through cash flow and through earnings, I mean, what are you doing? You're just speculating, you're guessing, and you're hoping, you're praying. The hopium has won out, right? The idea of like the massive people, the massive group of people who just hope and they just pray for better times and for, you know, sell it to some fool, the greater fool strategy, sell it to someone else for more. That's been winning out from January to now. Like a lot of those guys are up 100, 150%, and it makes no sense. It's irrational. It's clown town, right? Why would tech valuations increase while rates are rising? Well, economic data is not great. While inflation, core inflation is sticky and still way higher than the 2% core target. We're like 150% higher than where they want to be right now. And I don't know. If the Fed tomorrow came out and said, hey, you know, we're going to pivot, rates are coming right down, okay, I could see kind of my short. They didn't. Today he came out and said, inflation is sticky. I don't know if people heard the same speech I did, but inflation was sticky. Core is high and sticky as well. You know, we honestly need some deflation, but that won't happen because, you know, why would it? Their quantitative easing right now is doing damage to, you know, a lot of sectors. And I think the valuations in tech are too rich. You can't use a discount rate on the cash flows of like 2 and 3% when we may have 6 or 7% as a longer term rate. If they pause too early, which they did today, we may see a resurgence in inflation. They've worked really hard to get inflation down. They've done a decent job of getting it down. It was 9%. It's now like 4 or 5, depending on how you manipulate your basket of goods. That's good. But they also went from 0% interest rates to 5%, 5.1% terminal rate in like the shortest amount of time ever. That should have collapsed the market, but the market is strong, right? A lot of people have a lot of money, and they've proven that through this, whatever you want to call it, great hike, great inflationary time. And yeah, so here I am, feeling like shit today. It's just, I felt like shit for the last month watching as I lose every day, betting against the index. And like generally, like I know, you don't bet against, the bears lose long-term always. But in this short-term environment, I feel like the bears should have won out. And we didn't. I didn't. I was bear too late, I guess. I switched to bear too late. And I was, you know, I'm down like 29% on the month, 28.9% in a month. That's fucked. Again, I was like 2.5 times to 1 short the Nasdaq. And so it's painful. It's reminded me, one of the lessons here is that I cannot control the market. And trying to bet against the US government, that is a recipe for failure. Trying to bet against a roaring tech market, probably not a good idea. I'm gonna hold this short until I get 3 down days in a row. So I've decided that I will not capitulate no matter what until I get 3 red days in a row. 3 red days in a row, I'll capitulate, I'll cut. It won't be the top. I'm not gonna make back what I've lost. I've accepted that I'm never gonna come back from this 30% rep. I'll probably make back 15, 20% of it, cut, take my losses, switch to where I actually have a competitive edge, which is in buying businesses and buying real estate. And yeah, it's just, I'm reminded in these times that I'm human, and that, you know, ego is a dangerous thing. Ego is a dangerous thing, because you want to be right. And even if the data is right, the market's always right. And the market could say that one company is worth 100 times another company that's a comparable. The market decides. It can be irrational, but it is right. So it's been painful, guys, through this time. Hey, Stickman, how you doing? It says, sorry to hear, hoping you make it all back. I mean, I'm gonna make it back, but it's gonna be in real estate. It's not gonna probably be in the stock market. I'm at a point now where I'm not in a good place, and I just do not enjoy trading. I don't enjoy looking at my portfolio at all. Even when I win, it's time. It's time that I don't get back. Like, I'm in Vancouver right now, so I had to wake up this morning at like 5:30, 6 o'clock in the morning to get ready to trade. On vacation? Like, what am I'm looking back at what I'm doing. I'm like, wait, the whole point of why I got all this money and why I built this wealth is like, so I could enjoy my life. And I'm waking up at 6:30 in the morning to trade for 9:30 Eastern Standard Time. I guess it's 4 o'clock right now. It's 7 o'clock Eastern Standard Time. But I got up really early this morning, like 6. The last couple of days, I got up at 6, Monday, Tuesday, Wednesday. And that's not me. That's not who I am. I'm chained to my phone. I'm chained to my computer. And I'm watching, because you can't not. When you have so much money invested in the stock market, for someone like me, I'm the kind of person I can't. With real estate, if I'm worried about it, I can lean in. I can hire a better manager. I can go in there and I can optimize on cost. I can do high-level strategy. I can refinance the property. I can put it for sale. I can buy something else. But when I do that trading in real estate, I make money. I sell for a top. I go find something else that's better. In the stock market, it's really hard for me to have alpha, for me to have an edge. And I want so much to be right, going counterculture and you know, being the guy who's shorting. And I started shorting with the, you know, there's good data behind why I shorted. And again, I think that there's good data now why you should be short. You should definitely not be long the Nasdaq right now. There is so much downside possible and so little upside left, I think, in the very short term. Now, long term, I am bullish on tech. I think AI is gonna either kill us all or, you know, make things super, super efficient and drive GDP gains in a big way. Maybe both. Probably drive GDP gains for a while and then kill us too. There's a real good dystopian case to be made for AI, and it's scary. But that aside, I think there's so many gains to be made in tech in 5-10 years. But I think we're going to take several years to bring a lot of those cost savings and those revenue drivers into the business models. It's not going to be overnight. And so there's a lot of exuberance and a lot of excitement and a lot of energy for what could be. And I don't like to pay for what could be. You know, I want to pay for what is now. And what we can clearly see is, you know, the trend and the, really, I don't even want to pay for a trend, but I'll pay a little bit for proven results that I see trending upwards. I'll pay a little bit higher multiple for that, but man, oh man, these prices in the Nasdaq, just crazy. Okay, let's switch to real estate, because that's an area I actually have a competitive edge. That's an area I can actually win. And even if I'm wrong on my forecast, I have time, because real estate's very illiquid. So when you buy an asset at 70 cents on the dollar and you're wrong, if you think real estate's gonna drop to 80 cents on the dollar, you run your numbers super conservatively and you buy super safely. And when it comes time to take that asset and to, you know, go refinance it or sell it, if you ran your numbers and you bought it at 70 cents on the dollar, and let's say the market falls 10%, you're good. If I'm wrong and the market doesn't go down as much as I thought it did, and I end up being at 110% of what I bought it for, it's like, it's amazing, right? Like that's the beauty of real estate, is that I'm in control. I can cash flow it, I can hold it. This short isn't cash flowing for me. It's literally just, it was designed to be a hedge that, well, really it was designed to be a counter to my real estate business. Because I thought, well, if the real estate tanks, the stock market will tank too. So if I short, and by the way, if I had shorted the S&P 500, if I shorted the Dow or the Toronto Stock Exchange, I'd be up right now. But I chose to short tech. Why? The TSX is down. Toronto Stock Exchange is actually down on the year. It's 40% underperforming the Nasdaq. The only time that the Dow and the Nasdaq have split their performance, because the Dow is down as well, right? From the Nasdaq has split this much was from the dot-com bubble. It's very rare. This only happens very few times. Data suggests that during times of extreme greed, which we are in a time of market sentiment that is extreme greed. The years and months that, typically the months that follow that type of position are negative. So data would suggest, historically speaking, we are in for a correction in tech. I think we're in for a correction on all the indexes. How severe, I don't know. My price targets are really high for 3 to 5 years from now. I think we're gonna make a great recovery, but I don't think we're out of the woods yet. I think there's just too much optimism. So I'm gonna keep probably holding this short, but I don't know. I'm ready to capitulate. I've lost so much money. It's just ridiculous. I started with a small position. I had $1 million short, and now it's like a $4 million short, $4 or $5 million short. And I just have continued to, the higher it's gotten, without a real change in any material data or outlooks. I mean, like, I looked at the reports today that they released, and I'm like, they're gonna keep hiking. The consensus is 5.6. They revised from 5.1 to 5.6 terminal. There are no cuts coming this year. There are hikes coming this year. Market was pricing in cuts as soon as September, like a full percentage point, 1.5%. Now it started to come back a little bit. Somehow the market's still rallying. Well, it's come back. Like, how do you adjust forecast down and the market rallies up? Anyway, just crazy, just crazy. I need to shift gears, right? I need to shift gears back to what I know, back to where I can make money. I have a successful flipping business right now, and we still make tons of money, and I do really well with that. And I'm good at buying real estate assets. They're like buying businesses, right? I can have a competitive edge there. It's very difficult to beat the best traders. Like, when you're trading at home against, you're trading against the best in the world, right? The best quant funds, the best PhDs, and they have 20 screens and 3 assistants, and there's a whole team with trying to get the best data and make the best decisions. You can't do that in your basement. You can't do that from home by yourself, especially not on your phone, especially not with your laptop. Like, the only way to have an edge is to have no life. And so, do you even want that? Even if you could develop an edge in the stock world, do you want that? And the answer for me is no. So why am I trading? Epiphany there. In real estate, I already have my 20,000 hours for mastery. I can lean in there, and I know I can make an above average return. I can, like, I do 20, 30, 40, 50% annual returns in real estate all the time on projects. Now, my money isn't always, working for me in real estate. There are times where I have gaps between projects. Not every project is super successful, but on average, there's so many more home runs, and I have such an edge there that's where I need to be focusing my energy and my time. It shouldn't be on trading. I'm going to see this short through, probably just going to park it in an ETF short, or just buy, maybe sell bear call spreads that are a few months out, and let it play out how it's going to play out. Probably can make this $1 million back staying short. I feel like there will be a pullback on the Nasdaq, but man, it's painful, guys. It would actually have been cheaper to go to jail for a year than to lose what I've lost. When I think of how many hours I will have to spend to make back what I've lost, it's toxic thoughts. I shouldn't even have those thoughts. The line of thought right now, like, I'm thinking how many hours I'm gonna have to invest in real estate and businesses and whatever to make back what I've lost. And it's so many hours of my time that I just sold a year of my soul, or 2 years of my soul, to make back that money. Then I was talking to my wife today. It's her anniversary today, actually, of all days, for me feeling like shit and having lost all this money. And I was up $80,000 today, by the way, just as the Fed was speaking. When the Nasdaq was down, I was up like crazy. And my puts that I bought were worth $3 a contract. I lost internet in the mountains. We tried to pull over and get Wi-Fi. I drove like 120 kilometers an hour trying to find signal. Could not get it till he was done speaking. By the time he was done speaking, it had gone from, we'd have a 1.5% variance. And I got on, and those contracts were worth 20 cents a piece. So there was a 10,000% difference. As in, like, it wasn't a lot of money. Because I bought puts, the loss was like $40,000 or something all in. And it's painful. But it's just, I've had so many of those days lately. It's got to be a sign, that I should not be trading, especially on vacation. But I can't stop. I don't know if it's an addiction. I don't know if it's not an addiction because I don't get any, like, I don't enjoy it. Like, I woke up this morning and had my alarm at 6:20. I don't want to trade. But I was like, if I miss the Fed speaking today, I'm going to regret it. The day that there's a 2% pullback and I'm not short, I'm going to regret it. So anyway, here I am, confessing what I've learned and just sharing what I've been through, and it's been a hell of a ride. It's been a hell of a ride the last few months. I've fucked up a lot in the stock market. That's okay. My wife made the point today when we were driving, she's like, you know, even with this loss, it doesn't matter. Like, had you have won $1 million in the markets and you predicted it right, does it make any difference? And it's like, well, no. Like, our lifestyle is so basic and so plain that I don't need a lot to live. Like, we are very frugal. I'm good at finding deals. I'm in this full house in Vancouver here for like $100-something a night on Airbnb. And I was staying at hotels that I'm a platinum member, so I was getting free breakfast, free dinner. And I was staying at hotels for $70 a night, $80 a night. I'm like, geez, I can live so frugally that I don't need a lot. And just what I have in real estate alone, what I have in private lending and if I lost everything in my stock portfolio, which I have, and I still have millions left in my stock portfolio, I could come back, you know, in the stock portfolio. Probably not. I'm feeling pretty down in that position. It's going to be pretty hard to come back. I'm 2-to-1 short, right? So I think the Nasdaq's up 37%. Now, I have had some hedges on, so there were certain days where I cashed in on those hedges. So I should be down 70% on the year to date on my entire portfolio, but I'm down like maybe 30% or something right now, which is like, fuck, like I have 70% left. That's fucked. But I gotta focus on real estate, because that's an area where like my brother can bang out 10 flips a year, and if I focus on finding better deals for him and leaning my time and energy there, instead of waking up at 6:30 in the morning and trading on my phone, like, what am I doing? I'm probably making it worse, if anything. Just buy the short, don't look at it, check in on it, you know, once a day or once a week, and, you know, go from there. Okay, let's do the Q&A here. So you guys have some questions and I got some answers. David says, they just started a retail construction development across the street from one of my places. How should I approach the contractor to see if they will take a side job to widen my driveway? I mean, potentially, if they're doing a job right next to you and they have the materials there, you can often walk over and say, hey, do you want to do a little cash? You know, you want to make a little cash? Come do my side. Oftentimes, they'll say, yeah, of course, love a cash job. And they'll come over and do something for you on a deal. But just go and ask. Doesn't hurt to ask. All right, next question. Bum, bum. The market can stay irrational longer than you can stay solvent. So true. It's been so painful, though. I've had, in a 1 month span, this is worse than when I lost $1.5 million or $1.3 million on Newegg. This is worse because with Newegg, I lost $1.3 million and then it rebounded. I made 700 back within a week span. I think on the whole month, I'd only lost a couple $100,000. This I've lost so much for such a long period of time. I've just been losing consistently for months. Because again, I'm shorting the Nasdaq. And so even in a bull market, there's gotta be a pullback. Like when the market runs up 40%, there's usually like a 5 or 10% correction before it keeps going. It never goes to infinity, right? Like there's the aggregate of the whole market never moves up always every day. There are a number of down days. It's just, we've had 5 days now in a row. Then 5 green days. You know how rare it is to have 5 exuberant green days on the Nasdaq in a row? The amount of bull energy out there is just, there's almost no bears left. And that's how I know I can't give up. That's how I know I can't capitulate, because the pain it's coming. And the resistance in the floor is gonna fall quick. So holding in there, guys. It's painful. Don't do as I do. Dollar cost average. Buy the market. If you can develop a competitive edge, spread your assets out into things you can control. I can't control where the Nasdaq's going to go. Even if I have all the right data and I make all the right analysis, even if I have the right conclusion, it may still go the other way. So, something to think about, guys. Stickman says, I locked in a 3-year at 4.93. Should I take this? That's great. I would take that 100%. Just bought a house. Seems like a good rate. Can't predict when variable will come down. I would say that, so Bank of Canada is forecasted to hike 2 more times. Our prime just went up a quarter. Both Canada and Australia went up. I was hoping the Fed in the US would follow suit and do another 25 basis point hike. Historically speaking, whenever they pause and then hike again, it leads to a resurgence in inflation. So Potentially pausing too early might have been a mistake. We're going to find out. Pausing usually leads to resurgence in inflation. Remember, there's a delay from when they raise rates to the consequences to inflation. So we are still waiting to see the consequences of what they just did. But if they stop now, inflation may end up being stickier for longer, which is, again, not a problem really for the Fed, because inflation is just a tax. The more they inflate your assets, the more they can tax you, right? And you have less buying power in your assets. So inflation's good. They love inflation. They can print their way out of debt. It helps them balance their budgets. It helps them out of the massive amount of debt that they have personally as well. So the government does have a bias to want inflation. We don't want inflation. The average everyday person, I mean, I do actually, because I have a lot of real estate does really well in inflationary environments, because again, we put in, $1, the bank puts in $4, and our $4 borrowed from the bank are at a fixed amount, right? If we borrow at 5% interest and inflation runs at 5%, it's as if we borrowed that money for free. So that's in our benefit. Inflation allows us to grow at 4 to 5 to 1. It goes really great for our businesses and for our real estate portfolios. So we want that. Inflation's good in some ways, but I don't know. The cure to inflation is so much pain that if they don't get this under control, although I will admit they've done a pretty good job getting inflation down. They've had a lot of good things happen that have kind of come together to be like a perfect bull case scenario. And I didn't see inflation coming down as fast as it has, but core is sticky. Like core hasn't really come down this year at all. And so that's, concerning, I would say, to say the least. So I don't know. We'll see how it plays out. I would definitely not go long right now on the Nasdaq. I would definitely not go long right now. If I switch to long right now, you're going to be in for, I think in the short term, you're in for a world of pain. If anything, I would go into bonds right now. I would go into fixed income. I'd go into private lending. I know of opportunities where you can make 10% all day risk-free, like a risk-free 10%. Why in the world, when you get a risk-free 10%, why in the world would you ever go into the Nasdaq right now? It's up 45%. You think there's going to be a pullback in the next little bit? I mean, it's hard to time the market, but I would say there's probably going to be a down in the next year, 2 years max. There will be a really great entry point, and it'll be after a series of red days. It is not after 5 green days in a row, after a plus 12% month, after the most bullish run we've seen in the last little while that you go long. Wait, I think there'll be better opportunities to buy in, but that's my 2 cents. I'm shorting also, so obviously I have a bias. I may close that short at some point if I can see data that supports or even if I see a pullback. Like if I see a 5 or 10% pullback, and at the same time I see that the Fed is done hiking, which they aren't yet, but when I see that they're done, I see them start lowering rates, and I want to see those first rate cuts come in and inflation not resurge. So potentially, if they pause for too long, because this is the first time they've paused since like 2022, January 2022. They've been hiking every single meeting. It's the first time they haven't hiked. So we're going to see how that plays out. That might have been the wrong call. Data-driven decision should have been 25 basis point hike today by the Fed. Canada paused and our inflation resurged. And now they had to hike again last week. That's what happened last Wednesday. So if Canada and Australia are a model, you pause too early and inflation gets fucked. That's what happens. That's what's probably going to happen in the US. I don't know. They say the economy's strong. They say that inflation's coming down and that pausing was the right call. We're going to find out. I think the more they fuck around, the more they're going to find out. But who knows? I fucked around and I found out with this short. But we'll see how it plays out towards the end of the year. And I'm going to focus on things that I know I can control. And, I just keep going back. The only thing that can save me mentally going through this is thinking to myself, like, this money didn't matter. Like, I still have my house and my cottage and my life, and nothing has changed. Whether I had this money or I didn't have this money, it doesn't impact my lifestyle at all. It doesn't impact my financial independence journey at all. It's all gravy, and it doesn't matter. So in a lot of ways, that helps me mentally be like, okay, go back to my roots. This doesn't affect anything. My core is strong. Don't risk too much. Risk management means I can't put any more into the short position. I have to let it play out how it'll play out, keep doing what I'm doing, keep growing what I'm growing with businesses and with real estate. And that's the focus for me. Hey, Mike, what are your thoughts on locking in? So I'll circle back to that. I said I would lock in for a 3 year, so I would again lock in for a 2 year as well. I'm looking to lock in on, I have one mortgage locked in, I'm looking at another one I'm looking to fund right now, and I'm locking in for 3 years as well. It's higher than 493, that's for sure. I think it was like a 529 3-year fixed. And I wish I locked in sooner, but I didn't. And I would take a 529 3-year fixed right now, because again, you can always renew 6 months early. So you can renew without penalty 6 months early. So a 3-year fix is really a 2.5-year fixed. And you can go up to 3 years if you want to, but you can renew as soon as 2.5 years. So I think in 2.5 years, things will be back down. I hope so. I think that into next year, we will see rates start coming down. So the variable will lose for this year, all of 2023, and probably most of 2024 as rates are coming down. The variable is still higher than, because again, the variable right now is like six point something. So a full percentage drop before it's even at 5. So you're gonna start winning probably late 2024, maybe, and then 2025, you'd start winning. So on a 2-year fixed, you'd probably be really, really safe. It comes down to risk management. I'd probably go fixed just because, again, you know exactly what your payment's going to be. If they do shit the bed with inflation and rates stay higher for longer, you're protected. That's worth something. You could gamble on the variable stuff. I have some variable rate mortgages too that would benefit. Again, I think that Canada's probably going to see 7.5% prime, another 25 basis point hikes before this year is finished. So it may get worse going variable. Just factor that in, that it may get worse for longer. But teach their own. Same thing happened to me. I was up 40K. My bag is now worth 4K. Sorry to hear that, Port City. And again, the reason it's so drastic is because my portfolio is so large. If I had like $1 million stock portfolio, I'd barely feel this, but I have too much. The reason I'm so emotionally affected is I have too much, and that's a signal to me that I need to downsize that position. It's too large. It's a risk management issue at this point. James says, thoughts on Unbridge is a safe haven if market reverses, i.e. collect 7% dividend, most of the revenue is protected and contracted long-term. You know, James, I think a challenge right now with dividend stocks is that the cost to borrow is so high. When rates go lower, I will shift my entire portfolio back to dividend yields. I had a large dividend yield portfolio. I love to lever up. When I was borrowing at 3 and 4% and the dividend yield was 6, 7, there was a huge spread there. You can lever up your dividend stocks 2 to 1 if you want to. And all of a sudden your 7% yield becomes 14 and your cost of debt's like 3, and it's just like real estate, where if the return on asset is higher than the cost of debt, it works, it maths. But the math doesn't math when you lever up your Enbridge portfolio. Like you can go get bonds. I forget bonds. You can go lend private mortgages at 10%. I don't know. I guess the tax treatment's really shitty for private mortgages. So there's that as well. 55% effective maximum tax rate in Ontario. So at least dividends are preferentially treated from a tax perspective, and capital gains are preferentially treated. But I think those dividend stocks are going to struggle for a little longer because they're competing against such high yielding bonds. And right now, competing against the FOMO. There's a lot of fear of missing out. People are piling into tech right now because they see something run and everyone wants to get on the train. That's the stupidest thing to do. You don't want to jump on the train when it's already run 40%. The time to get in is not when it's already run. It's the start of the run, maybe the middle of the run, but where's the top? Who knows? I think it's probably a lot more downside possible, a lot of risk there. If you're going to pile into tech, please, please, please sell calls. Sell covered calls in your position to protect against downside, or at least buy some puts to protect yourself against a downside rip. Yeah, that's my thought on that. How was visiting Matt? Matt was good. It was nice seeing his Citadel. You can check out that video from last week where we chatted. We had some great off-camera chats around the campfire and stuff, and it was just nice to see him. It's been a while since I've seen him in person. So it was nice to connect with Matt and hear what he's up to. And he's definitely had a huge mindset shift, which is super cool to see. I personally think he's in a better place now than he was then. That's my perspective. But he seems like he's happier. He seems like he has not a lot going on, which is great. Like he used to be so busy with so many businesses and projects, and now he's just chilling. He's almost, the whole thing we started with years ago with early retirement, it reminded me while I was there about some of my core values around that. And it was like, wow, I kind of forgot about why I started on this journey, and to unlock financial independence and spend time with my kids and do what I love. And it reminded me that early retirement's important, and I've lost track of that in this goal of being a billionaire and the pursuit of more. And I have enough. And Matt even said that to me, almost directly. It was like, why? Why are you still pushing? To what end? You have enough. You have more than enough for multiple lifetimes. Like, why are you still going? You could literally chill and just put all your money in something passive like private lending, or build your own little fund and just chill. And you have no properties if you wanted to. That wouldn't be me. I like to have projects to dabble in. I like to negotiate and to grow. And so I'd always have something going, but I don't need to go at 100 miles an hour. I could slow it way down. I could just start enjoying the simple things and start smelling the flowers. And this trip across Canada has been amazing. I've had some amazing opportunities to just see some of the coolest things with my family. And I need more of that in my life. I think I want to build this cool triangle I've been talking about, where I've got the Bahamas, Florida, and Canada. And I want to be, exploring all of that has to offer. And maybe there's a resort in each location, and that's it. That might be it. That might be enough for me. And that might mean that I don't hit billionaire, at least not right away. It might take me, with compound interest, if I just grow at like 12% a year, I'll hit billionaire no matter what. So I don't have to try that hard. Now, to beat inflation and make 12%, like a nominal 12%, that's really hard, because I think inflation is going to stay high for longer. If we get inflation to 1 or 2% again, that'd be good. But I don't think that's the case. I don't think that's going to happen. Who knows? We're going to find out. We're going to find out, guys. So Philip, I guess, is new to the channel. Doesn't know how I made my wealth. So I started just working full-time job and saving everything that I made from that job. My wife did the same. We put all of our eggs into buying. We rent hacked, and then once we had the money saved up for a down payment, we bought a property. I bought it at 19. I'm now 30, so that was 11 years ago. In 2012, I bought a property, and I renovated it, and I added bedrooms and bathrooms, rented them all out, lived like a student, and lived for free. So I was able to rent out all the rooms to live for free. So then our living cost was zero. And even our food was almost covered in most cases. We didn't vacation a lot. We didn't enjoy things a lot. We just, like, the things we did for fun were like going for a walk, going for a hike, going for a bike ride, There'd be cheap night with points on my credit card from the renovations that I would use to go to the movies. Or we did go on a trip to Brazil, and that was all on credit card points. This from, putting life through our credit cards. And so that was like, it was a bare bones living. And that allowed us to save up money so I could continue buying properties. And I'd buy one, I'd fix it up, I'd increase the value. I realized I was pretty good at doing that. So I did more, and I bought 17 projects all by myself, 17 properties. I had well over 100 tenants at the time. I had a 100 and something bedroom portfolio. And that was all by myself. I'd never joint venture partnered before, just me by myself. I made my first $1.5 million, $2 million. I don't even know how much it was exactly, but I unlocked financial independence for myself, and I didn't need to work anymore. My real estate portfolio generated enough. Then I went to decide I would sell my real estate portfolio off because it's a pain in my ass trying to manage the property managers and trying to manage all the tenants and the problems. And I bought a lot of properties that cash flowed really well, and really good cash flowing properties come with headaches. And so I learned that that wasn't what I wanted to do with my life either, was all the stress of that. And I also didn't know how to build a really good systemized business. So I sold everything, enjoyed some time, retired for a while. I was at 24. And since then, I started joint venture partnering, and I blew up a huge portfolio, made a whole bunch of money, sold that off, did it again. Alex Hormozy has a really good video where he talks about this idea of like growing beyond what you're comfortable with and then selling it and starting fresh. And he's done that multiple times. He's built up big businesses, he sells it, starts fresh. Big business, sells it, starts fresh. And that, like, when you sell everything and you start fresh, you have a new perspective. You think differently. You bring all those old experiences with you into the new thing that you do. And you appreciate the downtime and all of the great things you have in your life so much more after you go from a hard push to a full stop. And that's just, maybe it's a personality thing. Alex and I probably have a similar mindset that way. But I love the all in and then the stop and take a break. The all in and they stop and take a break. And so that's served me well. And I think I'll probably continue to do that, where I build businesses up to their maximum valuation that I think I can get for them. Then I sell them and I cash in, and then I get bored and then I find something new to chase again. And that's just my style. That's what works well for me. And slow and steady, I grow my net worth over time. And I don't know, part of me thinks I could retire again. Days like today remind me that sometimes the things that are important in life are not monetary in nature. And maybe I focus a little bit too much on the money. Maybe I should be focused more on personal pursuits. Like, I'll be getting back into personal fitness and back into getting stronger again. I put on some muscle and some strength, and it's been great. I've been feeling really good doing workouts. If I'm having a bad day, I just get down and do some push-ups or go do some squats or go for a quick little sprint. Something like that just feels good. And maybe I get back into gaming again. I've had a challenge with getting into gaming just because life feels a lot like a game. And I have more fun, I think, building my own little, world. And in real estate, I kind of like that. I have this fantasy of, and seeing Matt's resort gave me more of feeding this fire and germinating that seed that I've had around the trio, where I have a resort in the Bahamas, Florida, and maybe in Ontario, or maybe the mountains here in Alberta. There's some beautiful, beautiful places. And I think that it'd be really cool to have businesses in each of those locations. Wherever you go is a tax write-off. It's just so efficient. You pay no tax because you're domiciled in the Bahamas. You're 90 days a year to be domiciled there. That's where your primary residence is. And you can go spend the other 9 months a year traveling, outside of the Bahamas, and just be in the Bahamas during the winter. And that could be a really cool setup. It could be a cool lifestyle. It'd be a cool business. It would just, along with that, I had this fantasy of like a group. And I started this company. I don't know what I'll do with this, just shell right now, called the Freedom Collective. And it might be an annual mastermind. It might be a membership. It might be that you guys could be part of this Freedom Collective and buy into it and own a piece of these resorts in these 3 places. But like just a group of people that have a similar mindset. And I want to be around winners. I want to be around people who are excited about life and who want to grow and build and who love financial independence and are, focused on an abundance mindset, while at the same time having a similar mindset around optimization of cost, right? Like all those things coming together and just being around, like, I don't know how to describe it, but like when you meet an entrepreneur, whether they're scarcity mindset or abundance mindset, every entrepreneur I meet, I have a common ground. And I just feel like it's because we both understand basic economics, entrepreneurship, like a common philosophical and political approach to life. COVID, I think, allowed us to see how important that can be and how the right and the left are so opposed that the left will literally lock people in their homes, take their children from them. Like, it's really fucked up. And I think that our society will continue to divide, unfortunately. Inflation's running high, and there's a number of reasons why I think that long-term there may be a great reset of some sort. And there's really, money is powerful, but you really have power in community. Like, you'll notice when they talk about those COVID rules, in Canada, you get called on for going for a walk in the park. Like, your neighbor would be calling on you, be like, he's out walking around outside by himself. Call the COVID police, and you get a ticket for going for a walk by yourself outside. Go for a hike in the forest by yourself. You're a danger to others. Oh, lock them up. That's how severe the lockdowns got. I couldn't go to the movie theaters. You couldn't go. I had friends who were unvaccinated, couldn't go into Home Depot, couldn't go to the grocery store at some points, couldn't go to the LCBO. It was complete and utter full totalitarian control project, and they proved they could do it. And the majority supported them. The majority are, it's kind of scary how far people will allow the government to go. And I'm seeing recent data and studies that seem to support, what was it? There was an article I saw that was the majority of Gen Z support government monitoring in their house, listening for things like domestic abuse. They always come out with it's for the good. So there won't be any domestic abuse, won't be any child abuse. We won't have any of these, what if you had a slip and fall or a stroke? The government should be monitoring you in your house. The majority support that of the younger generation that are being, again, grown in government-funded schools, right, here in Canada. That is, if that's where we're going, if the generation I'm a millennial, so the generation the newer generation after me believes the government monitoring your house is okay, they're in support of that, they're the majority. And soon they will be in control. And if they believe that, that's what's going to pass, right? Government loves to grow. Government loves to grow its power, its control. And so if given the chance and given a 51%, it will reign tyranny over the minority. And I've realized I'm in the minority. And so a lot of this has come back to my mindset around building a collective, freedom collective of people who will support each other. No one fucked with the Amish. Here in Canada, the Amish groups, none of them adhered to the lockdown rules. They didn't give a fuck. And you know what? The government didn't fuck with them because they were a group of people and together they had strength. Lots of millionaires and billionaires I'm sure got fucked with, but no one fucks with a group of people who are of similar mindset because there's power in numbers. And so I want to have my village, my community, what I wanted in university too. Like I wanted a group of people like all around that I could cross-pollinate with, and we could raise our kids together. Like I homeschool my kids, and I wish so badly that I had a community around me that did the same. So my kids could play with their kids and we can cross-pollinate and grow and have similar philosophical and political ideals and raise them about the great tenets of capitalism and free markets. Because again, I'm very, on some issues, I am very liberal, I guess you could say. Like, again, I'm not, a lot of conservatives are anti-gay or like hate abortion. I don't care about that. I'm pro-freedom. You can do whatever you want with your life. If you're gay, it doesn't bother me at all. I got lots of gay friends. It doesn't bother me at all. Like, I've been bi-curious before. It's cool, whatever. Like, we all go through phases. We all figure things out. We're each our own person. You want to get an abortion? Again, I don't care. Like, you do you. I'm religious at my core, and I like to preserve life where possible. But, like, again, freedom. I think it's more important to support someone's freedom to choose what they do with their life. And I think that, whenever you get onto government support and you start relying on the government for everything, it just doesn't end well. And every book that I've read about it, every time I've thought deeply about these things, I'm like, I want to be free, and I don't want to have just one passport. I don't want to be controlled just by, if my government says tomorrow that I can't leave, that I can't. Because when you try to apply for a second passport during a time of crisis, you're not going to get one. You got to have it before the crisis happens. So this Freedom Collective, we would have Canadian passports, hopefully, or some of us might have American passports. Some of us might have Costa Rican passports. I'm probably going to get a Canadian passport, a Bahamas residency, like permanent residency, as well as a Costa Rican passport, probably is my sort of ideal setup. And through those 4 locations, actually, I'd probably like to have resorts. I think somewhere South America is kind of safe when China goes to war with the US. Again, as China overtakes, and India too, really, as Asia sort of overtakes the power of the West, I think that there'll be a bit of a conflict there. And that's it might be a dangerous place to live. So it's nice to have that escape, just in case that happens. It's a fringe scenario, it probably won't happen, but I like to be prepared, to be prepped. So anyway, I'm gonna keep going with these questions here. That was a bit of a tangent. I don't know where I was going with that, but if you want to be part of this community, you want to invest in this, if you have kids and you want to help raise our kids together with the right mindset, and you want to be part of that community, and it could just be a cool way to live life. I think that would be the utopian setup. Because I go by, and I've even thought maybe I'll just buy a plot of land and build a whole bunch of houses and make a condo corp or something where I have control of who moves there, and say, hey, we'll only sell these properties to people who are like-minded. And so then the whole community ends up being a similar mindset. I don't know if that's even legal, but maybe with the condo control, I could decline certain buyers. Like if you're just an asshole who's like, leftist or pro-government, like you're not welcome in this community. I don't know, that sounds crazy, but I don't know. Freedom. I want freedom for everyone, and I want to be surrounded by like-minded. I don't want any NIMBYs. I don't want any not in my backyards. So I don't know, it's just an idea I had. Okay, next question. Bum, 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 bum. Go, Mike, go. Thank you. How long are you in Vancouver for? We're here till the 19th in Vancouver, Chung. So if anyone's in Vancouver and I do have time, I'm going to Galiano Island. I'm going around to a friend's wedding as well. We're gonna be pretty busy. We've got a bunch of stuff lined up, but there may be the odd day. I think tomorrow I'm pretty open. So if anyone wants to come hang out in Vancouver, I might have a little bit of time. I'll try my best to make some time. Next question. It could be dopamine issues. Yeah, I don't know if it's dopamine issues because most of what I've been getting lately is not, I haven't been getting a lot of positive from it, but I keep going back. And right now it feels like I can't give up at the bottom. And I'm inverse the Nasdaq, and it feels a lot like a top. It's hard to break the top, but it feels damn close to one. So if we get a few days of pullback, I'll probably take a break for a bit and see where the trend kind of goes. But I'm not quitting today. Not on an up day. after what I saw today with what the Fed released at 2 o'clock. Quentin says, loved your chat with Matt. Glad to see him down as well. He was a great mentor. What are your thoughts on the Canadian real estate market short term and longer term? So Quentin, I'm still buying. I still have some properties. So unlike Matt, I'm still invested in real estate. And so that may give me a bias. I'll just throw that out there. But I will say that I think short term, I'm bearish on certain properties. That said, if the right property that met the right set of criteria ever came up, I'd probably buy it, despite market conditions. Because again, there are certain properties that are rare and hard to find, and when they can cash flow, make a lot of sense, you buy them. But short term, I would say that you should be baking in a 5 to 10% pullback. Canada just hiked rates, and that's going to be felt in the next 60 to 90 days. Further, this winter, I think, will be the bottom because, seasonally speaking, from the peaks of spring, May to the bottoms of December, we typically see a 5 to 10% pullback, seasonally speaking, for things like, the weather isn't as nice. People don't want to move during the middle of a school year. Lawn maintenance isn't nice when there's sleet and snow and hail. So just for a number of reasons, it's a slowdown. Agents don't push as hard like around Christmas. That'll be probably the bottom, because it'll also coincide with the ends of the rate hikes and then into the rate cuts, I think, in 2024. So there'll be some really big bull energy, I think, in the spring of 2024, but some really downward pressure. Canada's gonna hike again, I think. And every time they hike, it should lead to about a 2% drop in real estate prices. So we have a seasonal drop coming, and we have the Bank of Canada hiking still in Canada. They paused too early. And I said this earlier in the stream, the Fed in the US is pausing too early as well. They should have hiked today. They were going to hike today, but they got good data and they didn't. And I think that's a mistake. To pause and then hike again is a mistake. You hike until you're done, then you pause and you're good. You shouldn't pause and then start like what Canada did, where we paused and then inflation's starting to run up in Canada, so now we're hiking again. It leads to a Volcker era in the 70s and 80s where inflation took a decade to get under control. And I don't want to see what happened in the 70s and 80s happen again. And it seems like we aren't going to learn from our mistakes, but hopefully we have. And hopefully this is a short-term thing, this great inflation we're going through. Time will tell. I think there's a lot of risk there. So I would say long-term, I'm very bullish on Canada. 81% in a new survey don't support Justin Trudeau. I was very happy to see that. Another silver lining, by the way, this loss, like this 7-figure loss that I now have, I can be in Canada for longer. I have a huge capital loss now. So the next $1 million that I make in real estate, tax-free. So when you think of it that way, I have a huge edge now to come back, right? So yeah, it's really bad, it really sucks, I lost it. It was actually, I lost it by actively trading, so I should be able to get it as a full 53% tax deduction. So if I go make $1 million, then it's like making $2 million after tax, because I now have a tax deduction that I can use. So it's not all bad. It's not all bad. There's a silver lining in everything if you look for the positive and the good, right? Okay. Double down on what you're good at. Totally, Quentin. That's totally true. Real estate is an area where I have a competitive edge. Buying and selling businesses is an area where I've had a competitive edge and I've delivered value before. Yeah, it's definitely somewhere I should be spending more time. And I just, in general, don't think trading is probably a good use of my time. Even if I was able to beat the market, which again, I don't think that I am able to beat the market. But we'll see. Time will tell. Campbell went down recently. What staple companies are you watching? So I think the challenge with some of these staples is potentially inflation. So just be careful, because they may not be able to pass those savings on. People buying Campbell soup are not rich. You buy better quality organic soups and better quality stuff if you're wealthy. So they're targeting your average person. And the average person right now is maxed out on their credit card debt. We have over $1 trillion in outstanding credit card debt right now, at the highest interest rates we've had in a decade, more than a decade, almost 2 decades, back in 2008. And it's not going to end well for the average person. And I'm not happy about that. I think it's a lot of pain for the average person. But the average person, we just went through, like, rent is up 20% in 2 years. Food is up like 30% in some sectors in like the last 2.5 years. Like, we've had major inflation where people spend most of their money at food and shelter, right? Like 2/3 of the average. Like, when you're really poor, by the way, food and housing are a large majority of your total spend. And so inflation affects the bottom 70% of people way more acutely than it affects someone like me. Like, if my cost of living goes up 20%, I don't even feel it. Like, let's say I make $100,000 a month and I spend, let's say $8,000 a month, and my spending goes up 10%. So if I'm spending $8,000 a month to $8,800, whippy shit, $800 a month means nothing. I make 100 grand, I spend 8.8% of what I make. So it has no effect on me. Like, really, inflation doesn't bother me at all. If anything, the assets that I have that are producing income, while we run through high inflation for long periods of time, those assets balloon in price. And so I get even richer. So it doesn't affect the rich at all, really. It actually helps us for the most part. It really affects the bottom 70%. The guy working the government job making $70,000 a year. He was doing okay when he's making $70,000 a year 5 years ago. Try making $70,000 a year now. I made 60 grand a year when I quit my job in 2016. 2017 I quit. I quit in 2016, I finished working in February 2017. But I made 60 grand a year. That was a decent salary back in 2016. 60 grand a year was okay. You know, for London, Ontario, it wasn't a big city. That was good. That was like $90,000 a year in Toronto. Now, if you inflation adjust that, back then I could buy a house for $300,000. That same house today is like $650,000, $700,000. The down payment I needed back then was maybe 100 grand. It took me 2 years to save that. Now it's 250 grand. And it's like, it's gonna take me 7 years, 6 years, 5 years to save that, right? Like, the divide between the quality of life then to now, mostly due to inflation, is drastic. And so when I think about staple companies, I think, man, those people are suffering. And how is that gonna play out? Can Campbell's Soup pass along that inflation and those supply chain issues? Maybe, maybe not. It'd probably be okay. I mean, they'll probably pass it on to them, but I don't know, it's got me worried. I worry for the average person. So the tangent there is, yeah, just be careful, guys. Just be careful out there. Don't buy one company. Don't take one position. My advice would be to, if you're gonna buy in the stock market, buy a little piece of everything. So buy the S&P 500, you know, maybe buy a little bit of some tech companies that you like, but do covered calls, sell covered calls in them, or buy an ETF that has covered calls on it. If you're gonna buy US stocks, make sure you hedge. I think the US dollar is gonna get weaker in the next year. I'm pretty sure the US dollar is gonna fall in the next little while. So there's a lot of strength in moving away from the petrodollar. And I think the US is gonna suffer as a result of that as other powers gain strength, and those currencies, again, with it, gain strength. What do you think of Tesla's recent run-up? Do you have a position in Tesla? I don't, Trevor, have a position in Tesla. I did have a position in Tesla in January of this year, and I sold that on the run-up. I made like a 5 or 10% profit. I'm quick to take profits, but I'm horrible at cutting my losers. That's just a flaw that I have. I like Tesla, not at this price. It's had a 13-day positive bull run, the longest run Tesla has ever had. The most green days in a row Tesla has ever had. 13 days in a row now of green. I don't know how it finished today, I didn't check, but it was on a huge tear. So does that mean it's not overvalued or undervalued? Probably overbought. There's probably gonna be a pullback, statistically speaking, but I don't know. I think that the value was great at $100 a share, so I bought some. At $200 a share, I think it needs to grow. It needs to hit some milestones first. And I don't wanna pay for things it hasn't done yet. And so I'll wait. And maybe it will grow and maybe I'll buy the company, right? But right now I don't feel like there's a ton of upside on Tesla. But what do I know, right? Yeah. Snake Eyes 11, it's been a while. How you doing? Do you have a mortgage broker you can recommend? I do have a couple mortgage brokers I could recommend for sure. Noreen says, would you consider taking on personal advising or mentorships for young adults between high school and university, considering this avenue? Noreen, I do coaching occasionally, set of courses. And it would be really nice if I could then potentially sell those courses, but then also give some of those courses away on scholarship to those students who I thought were great fits, who are on this journey. And so potentially I would say, yes, it's on my mission, my goals. I want to do that. I need to sit down and build those courses out. It's just not been a priority lately. I should do it. just getting started. I should get started and just do it. Hong Kong says, what contingencies would you recommend for a first-time real estate investor? As an example, I would say always have cash reserves set aside. Always make sure that you have, like I would say 2% of the purchase price set aside in cash, minimum. Have lines of credits that you can tap into in addition to that if you need them. Overestimate your budgets for renovations, overestimate all of that. Make sure you have additional currency set aside for those situations. Now, if you wanted to protect yourself against, and hopefully it's a cash flow property too, so that you don't have to worry about putting money into the property every month. Ideally, it's paying you every month. That's the right kind of property to buy. And then you could also set up a short against, Canadian real estate if you wanted a hedge against your long position. So you could take $10,000. If you bought a $1 million property, you could take $10,000 and you could short the real estate market if you were worried about the prices falling. If the price did fall on your property, then your short would do really well in that trading account. And then if it didn't, you might lose 10,000 and at least your property would be up in value, right? So that's an option too. William says the stock market is voting machine short-term and weighing machine long-term. You want to put your position on such you don't get shaken or lose more than you're comfortable with. Totally true, William. All good points. Things are ridiculous right now, though. It's a bit frothy. Quentin's down for the Freedom Village. Sounds good. Motor missed you as well. Great to see you on the chat there in the bottom. For sure. Always pushing the chat. I've been here on doing these live streams now for since started 2018, maybe I want to say. So 5.5 years I've been going live every single week. Never missed a Wednesday ever. When I'm sick, when I had COVID, on Christmas, holiday, doesn't matter. I'm always here, rain or shine. There's very few people you can say that have made that many appointments consistently. When I used to run the London on Fire division, I never missed a meeting for 3 years. I think it was a monthly meeting, I never missed it. And I pride myself on attendance and always showing up. I think consistency is one of the things that's allowed me to succeed where others have failed. I never give up. I just keep going. And that's also a flaw sometimes in my trading strategy, is I just never give up. I don't capitulate ever. Most people by now would be like, geez, I'm giving up on my short. I'm still holding it. I don't give up. And that tendency serves me really well in business. It serves me really well in real estate. Because again, I don't give up. And when I'm in control of the ship, I can find a way to course correct and I can win. You put enough time into real estate, you will always win. Put enough time into your business, you will always win. You'll beat your competitors because they don't put in the time. So, yeah. Let's do it. Good to see you in a biz. I have 100% of my wealth invested in the QQQ. Do you think that's bad? Are you trolling me right now? Because I'm 100% short the QQQ. I think that long term you'll be fine. I think there's a lot of upside in the QQQ. I was planning to long the QQQ in 2024. When I saw the pivot, that was when I was planning to go long on tech names. So I love tech. I think AI is a lot of the future growth and GDP growth is going to come from advancements in AI and tech. But I will say short term, I am very, very bearish. So you might say what I should do is buy longs on the QQQ and then short the hell out of it short term. That would be trading aligned to my current investment philosophy. Oh, you've been on the offer. So he says, what conditions or clauses in your offer? There's lots of the ways you can get creative with your offers. You could put in vendor financing stuff. You can put in, I've seen silver bullet clauses where if you're multiple offers, where your offer wins out by $1 up to a maximum, so you always win no matter what in a multiple offer situation. It's called the silver bullet clause. It allows you to basically ensure your offer is $1 more than the next competing best offer. I've seen some really cool stuff with, I always put in that they're going to maintain the electrical in the property up until closing in a good working order, plumbing, HVAC, roof, and leave you the property fully cleaned and broom swept. And that's important because you want to make sure the property's clean. Have you given the properties in horrible conditions before and gone back on the seller? That's important to be able to do that. Put those things in there because what if something breaks, like a electrical or whatever, you want to be covered. So put that in your offer, that they will maintain the home in its current standing and call out electrical, HVAC, plumbing, all of that. So if you do find something the day before closing, you go for your inspection, here's your final walkthrough, and you find stuff, you can make a list, and your lawyer can hold back money. So that's on the buy side. All that stuff is super important to do just to make sure they don't screw with you. I can't think of a bunch of other stuff, but there's a million other clauses that I've used. I've got a list of clauses when I make my offers, but lately I do a lot of as is, no conditions, because my price is so aggressive. But if you're not negotiating on price, you can sometimes go and throw in some extra conditions. Like I've argued for furniture for free before, hot tubs, renovation materials they left in the basement before. You can get really creative. You can ask for a lot of things. And so it's not always about price. It could be about terms. So make sure you throw those terms in there. All right, everyone, thanks so much for watching. It's been well over an hour. I really appreciate everyone tuning in tonight. And I really appreciate everyone who's followed along with this journey. It's been a hell of a 4 month, a hell of a quarter, hell of a year so far in 2023. I've had a really shit year financially, but I've had so many great experiences on the personal side and my development. I'm in really great physical shape right now. I'm really enjoying where I am in my life as far as like where my kids are and my relationships, and on a beautiful trip across Canada. We're coming back across the US, doing a US road trip back to London, Ontario. So I'll be going through like Yellowstone and Mount Rushmore, coming back from Vancouver. And I went through the Rocky Mountains. It was beautiful. I saw so many cool places that life is good overall, and I'm really thankful. And I don't want us to come off as like me just complaining, because despite the fact that I've lost a lot of money shorting, I still have a beautiful life. And I'm really thankful for the opportunities to learn from this. And I think sadly, the learning outcome is going to be that I just don't trade anymore. And I wish it was that I could take some lessons and become a better trader as a result of this. But it's really just become clear for me that I'm not going to be able to develop an edge, that almost no one can develop a competitive edge in trading. There are very few billionaires that made it there by trading, almost none, actually. And the amount of people who have become billionaires through real estate, so many, right? Like if you look, I think George Soros is like he's a far leftist billionaire, but he's like one of the only people who's successfully become a billionaire by trading. It's very rare. Even Warren Buffett doesn't trade because it's super dangerous. And I think even if I had the potential to be a great trader, what I have to sacrifice to get there is my quality of life. I don't know any good traders who have a good life. That might be shit to say, but I know some good traders, but they all have shit quality of life. Yeah, you cannot be an alpha quality, like someone has a competitive edge and live a good life at the same time. You have to put in the time. And so by definition, trading is shit because you have a shit life if you become a good trader. If you're living a good life and you're trading, then you're a shit trader, right? So it's like, anyway, I gotta go. I'll let you guys go, and we'll see you next week. Thanks so much, everyone, for watching. It's our little Airbnb. It's a little house we rent on Airbnb that I got a super deal on in Vancouver here. Beautiful streets. Vancouver's a beautiful city. Thanks, everyone. We'll see you next week live. You know where? 7 to 8 p.m. Eastern Standard Time, right here. You can find me also on, of course, on Instagram at Mike Rosehart. Bye, everyone. We'll see ya.